Hey guys, welcome back to the channel. Today's video, we're going to be talking about how you and your partner can communicate better with money. Overall, when it comes to the communication with money, a lot of people are not on the same page. 64% of couples acknowledge that their spending, saving, and investment philosophy is not compatible with their partner. Yet, when it leads to divorce, the number one thing that most people talk about is infidelity, or it is money when it comes to divorce. Now, in America, it is very taboo to talk about it with your family, even talking about it with friends. It's kind of weird, in my opinion, that no one talks about money when the possibility of someone having knowledge when it comes to financial situations or financial counseling, well-being, things of that nature can help out your friends and family, which of course you want to help more than anyone, but still nobody will talk about it. So let's go ahead and break down 4 ways that you communicate better with money with your partner. Number 1, set a regular and consistent time to discuss your finances. This is really important, guys, to see if you're on the same page. Early stages of a relationship, not so much the goals, the long-term planning, things of that nature. You might scare someone away, but it is more discovering the financial values that you possess, what you've kind of been talking about or taught from your parents. Talking about money can make partners feel very awkward, which again, the more that you do this and the more that you do this on a regular basis, it is just going to be an absolute plan. Now, the pressure comes or the need comes from wanting to put everything into one single conversation. This is not the way to do it, guys. When you sit down, usually if it is for an extended amount of time, it is going to end in an argument, sometimes especially if you are not on the same page. However, set a time limit on those conversations. Set, let's say 30 minutes, 45 minutes for those conversations, and have that conversation maybe once a week. So again, you're not going to have the point of getting angered with finances or discussing. So kind of going on money dates is what they talk to them. That way you can address any agreements right now up front, head to head, make a compromise or an understanding for both of you with the approach that you're going to use financially. Again, this is one of the absolute biggest things that people fight about when it comes to relationships. Second one, consider putting aside the word money. Now, money ties to emotion. That is really some of the fundamental things. Financial therapists emphasize the importance of the underlying emotion that is tied to money. To do this, you have to go past the service level issues and find a reason for money. I say this a lot, guys, that money is a tool to get things that you need. It is not something that you should have an emotional issue or an emotional attachment to, because the word money comes up and everybody wants more money. Money doesn't buy happiness. We've heard that before. When they say I'm stressed about money, they're probably saying I'm stressed about something that I've made a mistake for in the past, or something that has happened. I'm stressed that it won't be good enough to cover the money. Focusing on the underlying emotion and taking the money aspect out of it can gain a deeper understanding of the value of money and hopefully find a shared ground. Now, the third one, focus on the future. This, of course, is a huge thing, guys. Coming from a finance person that works on budgeting, that works on financial education, things of that nature, focusing on the future will allow you to pay for things without relying on the credit cards. So as couples take on joint commitments, even talking as a family, if you do have a family, figuring out what you want to do. So let's say next year you want to go to Disneyland. Your Disneyland vacation is going to cost $15,000, which I know is crazy, but that's pretty legit. So you want $15K by next year. How are you going to fundamentally get that? What is the roadmap? What is the plan? What is the goal going to be to hit that $15K mark? And is it even possible? If you're saving $100 a month and you have a goal in 12 months, chances of you saving $15,000 is impossible. But you don't want to get bogged down in the details. You want to see where you can get and what the goals are. Without judging them, without doing any of the math, just really research what your goals are. So if you like going up north, if you like going on vacation, depending on the cost, you guys need to come up with this together. Once you've laid out the goals in a roadmap, start prioritizing which ones you want to achieve first. When you look at some of those, it could be, again, vacations. For a lot of people, it could be weddings, it could be college education, retirement, things of that nature, but really road mapping and knowing which way that you are directed and where the funds are going. Setting this up automatic makes a life-changing event. Now, if you and your partner are looking to pull all of your money together, definitely check out credit unions, check out some of the online banks. They can offer a considerably high APY when it comes to these areas. And the final one, guys, number 4, remain adaptive when navigating your ups and downs. Life happens. We have seen it before, guys. Life will always happen. Financial situations will continuously change. That is why the general rule when it comes to budgeting, revisiting the budget once a month, seeing exactly where everything is, especially now with such an unprecedented time within America, prices for things are just absolute crazy. You know, looking at the rates that we have for auto loans, the rates for mortgages, things of that nature, you and your partner could actually be saving up for a home, realizing now homes are much more expensive and the rates are much higher, meaning your payment is going to be significantly higher. Might be a time to either move forward or even hold off and wait until you get some more ease in the market. Now, we can also think if one of you lost a job, got a promotion, got a big raise, really keeping the financial responsibility in relationship to what you earn. So if you're both earning, let's say $50,000 a year, all of a sudden one partner makes $80,000 because they got a promotion with a $30,000 raise. Doesn't mean that $30,000 should take a little bit more of the bulk or even out kind of that equation. Yes, most people say absolutely no, but yes, when you are in it together, when you are fully committed with another individual, making it easier together, especially when you look at joint bank accounts, when you look at most of the expenses, if not all of the expenses, are common expenses that are actually equated or gained from both of you. You want to make sure, again, that you're budgeting, that you know exactly what you're doing, having an open conversation in mind, talking about finances on a regular basis makes it feel very, very, it kind of takes the mystery out of it. If you know what's coming, if you know exactly what bills are being paid, and this doesn't rely just on one partner, guys. So again, in my line of work, I see a lot of people where it is literally just one person that controls every single penny in the finances. Something happens in that relationship where someone has never controlled finances in their life, and now they're forced in a situation where they have to handle the finances. It does not come out very well, guys. You have to know where everything is, where the money is, where the money is going, where the paychecks are going, where the investment accounts are, where the life insurance is. There are so many things that have to be covered when it comes to a couple. So really the bottom line, couples can benefit from reflecting on the relationship with money, visualize the financial priorities, write them down, guys, see them in a list and come up with a plan together. It will be an absolute game changer when it comes to a relationship. And both of you will be, and trust me, I've seen it 100 times, you will be financially more sound than you have been in the past because you are doing it together. Aligning your financial goals, developing a strong foundation of your future together in exactly what you want. And you know what? You might even find out earlier that the person you're with is not as compatible as you thought because fundamentally their finances are not the same. So all right, guys, so that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.